This is a story about a dude named Lane. He moved to the mainland and bought one place to stay. And then one day he went try to rent them out. And then he became one real investor man. Hey everybody, this is Lane with the Simple Passive Cashflow podcast. Please go to the website, go to the networking tab and sign up for the investor database there. Today on the line I have Sarah May. How are you doing, Sarah?
Good, Lane. Thanks for having me on.
And so Sarah is a former aerospace engineer who became passionate about real estate investing. She built up a rental portfolio and now moving up into larger syndicated multifamily deals with a great group of investors and helping people move their money out of the stock market and to physical assets like real estate. Yeah. She lives in Colorado with an amazing husband, Alex, and a 2-year-old son, Landon, and enjoys the outdoors and activities like skiing, tennis, and biking. So Sarah, how much simple passive cash flow are you making today and how are you doing it?
Oh, yeah, sure, Lane. So I guess I would say we're probably around $6,000 to $7,000 a month in the passive cash flow. And we've done it pretty much the traditional way. My husband and I both are engineers by training and would save up for a down payment, buy a rental property, put some tenants in there and hold it long term. We've primarily done 2 to 4 unit properties. We found that especially in our home market of Denver, Colorado, we were able to get a little better cash flow per dollar doing it that way. And we've been doing rental properties now since 2011 and just slow and steady kind of build up our portfolio to where we are now.
Any idea what you're going to do with these 10 properties?
Good question. We're talking about selling one of them right now. The market's pretty good here in Denver, but for the most part, we like cash flow. We plan to keep them long term and just keep renting them out. We have property manager now for almost all of them, which really took a lot of the burden off of us, management and time wise, and just keep the properties and always looking for a new one and new opportunities. But our focus right now really is more on the syndication, which just is getting a group of investors together to go after larger properties. And we kind of put together the deal, and then our investors front the money and get all the benefits of real estate without any of the management headaches or oversight involved. That's kind of where we are at the moment.
What is your Han Solo moment? For those of you guys don't know by now, the Han Solo moment is when Han Solo and his buddy Chewbacca from Star Wars were cruising the galaxy as low-life smugglers, but then crossed paths Luke and Leia, and his life took a pivot. Describe a time in your life when you met this resistance and it was a catalyst for change.
Yeah, good question. So I actually first started becoming a student of real estate probably in 2004, 2005, and was a college student at the time with, very limited funds, and actually didn't buy my first property until 2010 and first investment property until 2011. So it took a while for me to take action and have that pivot point in my life. But for me, it really was just knowing that my current career path wasn't something that I would find fulfilling for the rest of my life, and I needed to make a change. And to me, the most obvious way to do that just seemed like building up passive cash flow and supplementing my income and eventually replacing my income with real estate in order to free up my time to do other things that I enjoy. For me, kind of was 2 things that I had to have in order to take action. I first had to have the education and studied everything I could, all the different methods of real estate, trying to figure out which one best suited my personality and lifestyle. And then also having the desire to take action and actually change my situation for the better. So, desire plus education equaled action on my part. And that was really the pivot point, having that realization that I wanted to change and I wanted to have other income sources and free up more time to explore other interests and things I wanted to do with my life.
Graduate college?
2007.
You and I are pretty much aligned. I graduated in 2007. Working in corporate America, I just had a lot of bad experiences, and it kind of seems like a lot of people that I talk to had a lot of days at work or long periods of time where they just were unhappy. And do you recall some sort of event specifically that you can point back to that? I mean, I know I have a lot written down that I have in this book that I'm writing, but I'm not ready to release it until I finally quit my job.
Yeah. Oh, so many. For me, I think the two most frustrating things for me were sitting in 4-hour long meetings and nobody making a decision by the end of it. And you had just spent 4 hours of your time trying to come to a decision, but everything was decision by committee, and things just didn't happen very, very fast in the aerospace industry. And then also just having to, I don't know what the word is, but spin your wheels and keep doing the same thing over and over.
Do you ever think of, hey, you've got a good life, you've got a good husband, and well, what's wrong with me just staying here for 20 years? I mean, you're not going to stay there for 40 years. I'm sure you guys are good at saving money, but I mean, why was that not an option?
Well, I think it just was eating me up inside, having to kind of just be the corporate employee who just salutes and does what I'm told. There's very little appreciation for new ideas and doing things differently or trying to make things more efficient. And seeing the way that things were run and how long the processes took and how inefficient everything was very, very frustrating. And then seeing just how much money was being spent for very little output also was frustrating. The amount of time in meetings, and then just the general disorganization and lack of promotional opportunities unless you had hit a certain number of years with the company. It seems like corporate America kind of wants to squash everybody into this box. And if you're new to the company, you have this very regimented promotional plan, but you have no opportunity to jump to the top of the ladder. Otherwise, I think companies think that will demoralize morale for the people who are older and didn't get promoted. So it's just a very structured process, and new younger people who have all this energy and enthusiasm just kind of get told, like, just go do your job and we don't want to hear all your great ideas. So that's challenging in the corporate
I know that
world.
was what it was for me. I mean, it seems like you couldn't be a manager or like director or higher than that unless you had a bunch of white hair.
Yeah.
And I mean, I don't know. Sometimes I look like I'm 18 and I'm still waiting for my white hair to come in. I remember there was one day where I was, I was at the company for like 7-8 years. I was pretty much a veteran doing this for quite a while. And then they told me and these other interns, hey, go over there and do this. And I'm like, hey, dude, I've been here for a long time.
Geez.
And I thought it was funny at the time, but it...
Yeah,
how
I understand. Yeah, that's kind of just why I wanted to get out of it. And not saying that there's anything wrong with it. I mean, companies are that way for a reason, and maybe that's how they're able to stay in business for so long. But at the same time, when you're in that system and desiring more and more opportunity and ability for your work to be noticed and implemented, kind of gets old after a while.
Yeah, I think another thing I like is, at corporate America, you've got all these people who have just stayed there for quite a while and you're quite frankly unproductive and pretty cranky. And you come into the meetups that we go to. I mean, it's nice to run into people like yourself that are energetic, collaborative, just ready to take this on for themselves.
Yeah, I totally agree. I mean, going to engineering conferences where everybody's, not really wanting to be there and not really extroverted in the first place, to going to real estate events where everybody's there because they want to be and passionate about what they're doing. It's a huge difference. So yeah, I've noticed the same thing.
Yeah, and it's hard once you have that lens to go to those conferences, engineering conferences, and nobody wants to be there.
Yeah, and everybody just talks about their analysis they're doing or their project. Like, engineers don't really open up and talk about like their life and goals and family or anything, at least in my experience. And that's a generalization. Obviously, there's exceptions to every rule, but
yeah, no, that's my data point too. Not being one of the big boys in investing quite yet, aka the accredited investor in the eyes of the SEC, it's tough to find good options for investing. But then I started investing in the American Homeowner Preservation Fund, or AHP Fund, which is crowdfunding the mortgage crisis in America. The fund collaborates with existing homeowners to keep them in their homes. It's a way to make great returns while feeling good about making a social impact. After investing myself in the fund, it was awesome when they approached me to become an advertiser of the company. You can start investing with as little as $100, and if you want the free Burn Zone book, please send me an email to lane@simplepassivecashflow.com. did you burn the boats and let this stuff happen naturally? Was there some kind of internal change that happened?
I'd say kind of just getting to that point where I knew I just couldn't stay with my job the way it was any longer. And I had a lot more to give the world and things I wanted to accomplish that just were not going to be achievable staying in my current career path. So that was, kind of the catalyst for change. But it did kind of take a while to figure out where we really wanted to go. I mean, we looked at, did we want to be wholesalers? Did we want to be house flippers? Did we want to invest in mobile home parks? Did we want to invest in assisted living? What did we want to do? And kind of our first step that we did actually was a bit of a misstep. We decided we wanted to try to fix up and sell a property.
Oh no.
That our realtor had recommended to us. And we were, we'd seen HGTV and we're like, all right, this sounds like a great idea. And we even hired a contractor, but things just did not go according to plan. Like we ended up doing a lot of work there ourselves, plus just all the time driving to the property every day to make sure the contractor was doing what they were supposed to be doing. So that, quote unquote investment was definitely a learning experience. And I'd say the biggest lesson we learned was just that we didn't want to be house flippers. And from that deal, we made, I think around $8,000 of profit after 6 months working on that thing. And if we had just kept it as a rental for an extra year, we would have made about $40,000 just from market appreciation. And now 5 years later from that flip, looking back, that house is actually worth double what we sold it for. So, $170,000 or so more than what we sold it for after fixing it up. Kind of just from that experience, it's like, man, rental properties really have a lot more potential for growth, and they can be relatively passive. Obviously, it's still work if you're managing them yourself, but a lot more passive than a fix and flip property. So, after that fix and flip experience, my husband Alex and I just decided to do buy and hold real estate and set the goal of buying 2 properties a year with 2 to 4 units each. And for the most part, up until the last, year and a half of where we've started to syndicate larger deals, we've stuck to that plan and it's worked out really well.
So how did you guys cut through the dogma of real estate investing is flipping houses? I mean, I know a lot of new investors that come to me, they're like computer programmers and making $150 a year, and they just get brainwashed by all this HGTV, all the local meetups, they're all flipping houses. Didn't you guys see that too in Denver?
Oh yeah. I mean, the cool thing to do is to flip houses, and I used to go to all the real estate conferences and seminars I could possibly get my hands on, and pretty much all of them were the hype of buying low, fixing up, selling high, 4 to 6 months later. And I guess the real catalyst for me was probably Rich Dad Poor Dad and reading that book and realizing that for property to be considered an asset, it has to put money into your pocket every month. And a fix and flip doesn't do that. It actually drains your pockets for a long time until you finally sell. And realizing that rental properties, they put money in your pocket every month. It's relatively passive as far as how much active involvement you need to have, and over time it appreciates. So understanding the definition of assets and really diving into Rich Dad Poor Dad and all of his other subsequent books, I'd say that was the first thing that we came across that really pointed us towards rental real estate.
I know we had a real estate dinner here recently, and the story came out from one of Robert Kiyosaki's book. I think it was Cashflow Quadrant, where he talks about his rich uncle took him out to the farm and he showed him all the cows, and he said, in this farm they milk the cows sort of like cash flow with the houses, and look how happy the cows are. They're grazing the fields, and then he says, well, over there they slaughter the cows like home flipping, and he's like, oh yeah, the cows don't look very happy there.
No, keep the cows happy, keep buying houses, and everybody's happy. Tenants have a nice place to live, and the owner keeps making cash flow.
And so what's a 2-week experiment and a 6-month project you're currently working on?
2-week experiment, I guess, I would just say working on my tennis game. I just started a summer league, and need to kind of get back in the game. So working on that. And then 6-month project, that I have to go back to a deal that we're working on right now. We're actually sponsoring our very first syndication and putting that together. Property here in the suburbs of Denver, be adding some amenities, covered parking, backyards, and doing a major interior renovation project, getting everything kind of up to market standards and, raising rents and improving the place for everyone living there. And, maybe even in 6 months, we'll have another property under contract by then. So plan underway and start making money for our investors.
Yeah, so this is something I'm pretty interested in because I've kind of in the same shoes as you, just starting out in the apartment investing world. I mean, it took you a while to find that first deal, especially in the seller's market.
Yeah, it was a very long process. It took a lot longer than I thought it would. So I had been educating myself on syndication and commercial properties and apartment buildings for it's probably been over 2.5 years at this point. And then a little over a year ago, I came across 2 different investing groups, ended up joining up with one of them. It's investing group and education. And, spent $20,000 to join this group and kind of thought, hey, from here, it's going to be easy. I have all the tools that I need. I have a great mentor. I have a great group of like-minded investors. It's going to be, a simple ordeal from here. And really, it took a long time to just find a deal that worked. And I think through the process, also just understanding how to analyze deals better, how to network with brokers, present yourself in the most favorable light. So it was a growth process while we were looking for properties, but that's been a year of looking at properties, analyzing probably over 50 deals, putting in probably over 100 actually. Putting in offers, letters of intent on 12 deals. And for the letters of intent, we did hours and hours and hours of research just to get to that point to be able to submit that offer. And so when we kept hearing no, or you got second place, or the owner decided not to sell, it was very discouraging for a long time. Just thinking like, are we doing something wrong? Are we ever going to find a deal in this market? How can we make the numbers work? Like we have an obligation to our investors to hit a certain level of returns, and there's these other groups that are outbidding us. So how do we make this work? And so it got pretty rough there at some point, but I just knew we just had to stick to the process. It would fall our way eventually, and just kept going. And sure enough, a property we had bid on, 4.5 months prior ended up coming back to us, and we got kind of an off-market opportunity to look at it and put in an offer, and now we're under contract. So it all worked out. Maybe not exactly how I had envisioned it, but in a way it's better because by the time this property did come our way, we had that experience and understanding of the process, and it's a great group of teammates with brokers and lenders and attorneys, et cetera, to make the whole process much smoother.
I think people don't realize, how much underwriting goes into the properties for it to actually come out to something that we discuss. It sounds like you took the more sniper approach analyzing deals. I've been doing like a shotgun approach, which I need to change more into a rifle. I've just been analyzing deal after deal after deal, and then 99% of them just don't make any sense. The way I look at it is I look at the bottom of the page. If I don't hit 100% just with underwriting in 5 years, then it's a no deal. And it makes you realize how much people don't know how to analyze these properties, and they're still buying them. I'm like, if I underwrite a property for 4.5, broker tells me like, well, what the heck do I know? Like the guys just bought it for 6.5. And I'm like, well, that guy probably overpaid, right?
Overpaid.
Like, that's why he's selling.
Exactly. Yeah, no, it's definitely challenging. And I think at first we looked at a lot more deals and, looked on LoopNet all the time and looked on all the brokers' websites like weekly and things like that. I think we analyzed all the deals like right at the beginning, and then periodically, more deals come out, but it's not that same frequency as some other things. And I think the other thing that really helped us not have to analyze as many deals was we got very specific with our criteria for what we were looking for. And especially in the Denver market, it's like, okay, we know we can't go above a certain point because that's just, too big, but we also wanted to stay above a certain point as well and actually be involved in properties where we could hire professional third-party property management, work with the brokers that we'd established a good working relationship with. So we kind of had that sweet spot of where we wanted to stay between. We knew what, the age of the property, the markets, the condition, general features we wanted to have, and also just communicate that with the brokers of, what sort of returns we needed the property to provide, et cetera. So we were able to have a smaller selection of properties to look at.
Anything that you kept thinking to yourself to keep it going, and that, when you're going through month 6 or 7 or 8, nothing?
Yeah. I guess I just always had this feeling in my gut that it was going to work out and we were going to find something, and had a few plan B's and C's as well. If, the Denver market didn't work out, places where we could look outside of Colorado that were good, strong markets and, wouldn't be too long of a plane ride to go and check on the property. But especially for our first deal, I really felt strongly that I wanted to be local, if at all possible, so I could go to the property whenever needed and check on things and make sure the work's getting done for our renovations and everything else. So I really wanted to stay in Colorado, but did have some plan B markets. And
I mean, Denver's a little bit like Seattle, not as hot, but like you still have a lot of unsophisticated money that are just want to throw some money into apartments. So it's hard to find deals.
Yeah, took about a year. What kept me going was just feeling like it was always going to work out, and I just had to keep getting more educated on investing and stay true to the process, keep making offers and analyzing deals, and eventually good things would happen. So, I wish I had more of a quantitative answer, but that really was it. That's kind of just what kept me going.
I know a lot of people say that it's just to be a little bit of unrealistic in your expectations and just believe that's going to happen. Yeah, totally. And I mean, the other thing I haven't talked about yet is, so, I'm not doing this alone. I have a great, obviously my husband's helping me. And we also have 2 co-sponsors from Dallas, from our investor group, who have a great track record and have done a number of syndications before. And without them, we'd probably be looking at smaller deals and having to change our strategy a little bit. But by partnering with them, kind of opened up some properties just because of their credibility and track records. Can't emphasize enough, having a strong team and, partnering with people is necessary. If you don't have some skills or the track record, you can always find somebody who does and maybe doesn't have, the time or doesn't have the education in that particular niche. Yeah, I know after, we come back from Dallas, it seems like, you're all motivated because you're all in a room with people who are doing it, struggling along too, analyzing deals and doing it. But then when you come home, and especially coming back to your normal job in cubicle land, it's so difficult to keep that momentum going.
Mm-hmm. Yeah, the mindset of people in some of the real estate circles is definitely different than the mindset of W-2 employees, where I hear you, Lane. Like I would go to work when Alex and I were, just doing our own rental properties, and would try to mention here and there, to close friends at work and colleagues that were doing real estate and stuff. But I kind of had to keep it hush hush because I didn't want people to think, oh, I'm distracted at work because I have some rental properties. But people just didn't really get it. Like I would try to start conversations, and people just thought it was, landlording and fixing toilets and weren't really interested in the financial benefits of it. Yeah, a lot different being a W-2 employee, living for the weekend, which I was for a long time, and kind of being a real estate entrepreneur where you're excited and always looking for another project.
So something that you recently thought burning your cash on for time savings or improvement in quality of life?
Typically, I would say I've spent most of my extra cash on things like vacations, quality time with my family, things like that. If I had to burn my cash on something right now, it'd probably be a new car. My car's showing her age. Although I hate to get rid of it because she still runs great. But yeah, probably a new car if I had to burn my money on something. But in general, spend money on vacations and make the memories that way.
Yeah, I'll give you a tip. I would lease it and buy
Lease
what you
it?
want.
All right.
That's what
Awesome.
I did. Same thing. I had that old car since college, and it was about time to buy something halfway decent. So that's what I did. And you want that money for down payments or syndication, so lease it.
Yeah, that's a good point. Yeah, because it's like all our money's either been going into real estate investments or, our splurge is vacations. So
right, and you can grow that money 20-30% a year on your own. I mean, what's a 5%?
Yeah,
a lot of these leases are like 0%.
Yeah, that's a good call.
For most people, probably own their car because they can't grow their money at all, or they can't even save it. But I think you're on a different side of the spectrum. Yeah,
interesting. What did you end up buying or leasing?
Mercedes.
Oh, cool. Very nice. Yeah, I need an upgrade myself.
You deserve it.
Well, I never want to say that, but
time to celebrate on your deal. So something that you've changed your mind on recently?
I guess this isn't super recent, but one of the things I've learned just being a rental property owner is, sometimes, you can't let your ego get in the way of what you buy. We buy a lot of Class C and B workforce housing for our rental properties. It's okay not to have the nicest property on the block. You actually can make more money in properties that are in not as nice of neighborhoods because the price to buy the property is a lot lower, but yet the rent is only marginally lower than some of those nicer neighborhoods. So yeah, you don't have to buy the nicest property on the block. And then also, one thing for me that was a mental hurdle was renting to Section 8 tenants. I know some people love it, some people hate it. We've found it to be fine, and it's actually has some benefits like getting a guaranteed rent check from the government every month, and then also just being able to provide these people a nice, safe, clean place to live, which sometimes they haven't had that before. And haven't had landlords who actually kept the property, up to date and fixed things that broke. Yeah, that was one of the things where ego originally could have kept getting in the way. One example was our very first rental property that my husband and I bought was in this little area of Denver, like a 1950 something property. And you walk in, it's just bare bones. Like there's vinyl on the floor, white walls, old light fixtures, dated kitchen. And kind of walking in there, it's like, oh, I don't know if I like this very much. But then I had to remind myself, hey, this is going to be a rental property and it's functional, it's clean, and it's not, the newest, shiniest place on the block, but it's going to be a great rental and going to be a great place for somebody to live. And that's actually been our best performing rental property to date. And we almost passed it up.
It seems like people like to say they own places here in Seattle just to say they own that, they don't make any money. But what I say is like, yeah, I wouldn't live there, but have I lived in there? Or would I have lived in there at some point in my life? Yeah, I probably would have. Mm-hmm. Tony Robbins identifies two large concepts that we usually show you to gain perfection at. First is the art of fulfillment, and the second is sense of achievement. So if you died tomorrow and I were to email this to your kids a couple of decades later when they actually would listen, what is your first secret or hack to the science of achievement?
I'd say my only habit is the morning coffee and writing to-do lists. I journal occasionally, which I find helpful as well. But then, I think the other thing that just any entrepreneur has to have is just kind of being persistent, knowing exactly what you want and being very specific about it. And I think when you're persistent and you know what you want, it makes finding opportunities a lot easier. Finding that what you previously thought was impossible could actually be possible with some hard work and education and making sure you have the tools you need to be successful.
What is your secret or hack to the art of fulfillment? The other side. How do you contribute back to the most fulfilling parts of your day?
I think the whole reason I started out on this real estate journey was just for having the option of what to do with my time, not having to trade my hours for dollars, but being able to, free up some of that time so that I can spend more of it with my family, spend more of it outdoors in Colorado. I love all the outdoor activities here. Also just working on real estate. Like I think that actually is, something I'm passionate about, and I've always loved it. Loved the numbers side, loved the tangibility of it. Just want to keep keep doing that. Definite things I would like to do more in the future, like helping with financial education for kids, help educating people on healthy food choices and things like that.
Anything we missed, or you want to get your contact information out there for people to get a hold of you?
Oh, sure. Yeah, no, that's been great talking with you, Lane. Thanks so much for having me on. If people want to get a hold of me, you can just check out my website. It's www.regencyinvestmentgroup.com. Contact me through the contact form, or you can always just email at sarah@regencyinvestmentgroup.com. Thanks so much, everyone, for listening. It's been great.
Thanks, Sarah.
Thanks, Lane.
This website offers very general information concerning real estate for investment purposes. Every investor's situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.